The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We have Apple's earnings today, and I just wanted to bring Apple up here. I posted this early this morning when it was trading at 34.64. It's now below the 61% retracement at 34.04. It could go either way from here, but I think the maximum upside, if there's a big surprise, would be at 38.56. But if I had to make a bet, which I won't, my assumption would be to the downside. But, that's my assumption, and that doesn't count. But because you're so nice to me here at TFNN, I am going to share with you my secret system on Apple. I'm going to get this up here. This is no joke, folks. I'm going to bring this up here. So be ready. Okay, let me tell you the story behind this. This was about 1996. Yeah, 24 years ago. Mark Douglas had just moved here, and we were sharing an office, and we had a student friend of mine out of Faraday, Louisiana, Leo Young, a really nice old guy. He was a sugar farmer, and he owned a couple of insurance companies and about half a dozen funeral homes and stuff. And he was a cousin of none other than Jimmy Swaggart and what was his name? Mickey Gilley, and also the killer, Jerry Lee Lewis. They were all second cousins, and from Faraday, Louisiana. So anyway, I was messing around with something. It wasn't Apple, but I hit the wrong button because Ensign had programmed the Pesavento patterns for me, and I hit the wrong button. And Leo and Mark sitting behind me, Leo sitting next to me, and I hit that button, and Leo said, "Oh my God!" He said, "What's that?" And Mark says, "Oh, that's Larry's $35,000 proprietary trading system." And he said, "I'll take it." And he was serious. We got a big joke out of that, and I let him have it for $25,000, being the nice guy that I am. But anyway, that's the main thing. His cousins were Jerry Lee Lewis, Mickey Gilley, and Jimmy Swaggart. Their sisters were all married to those famous guys. So anyway, let's move on here. Marshall, you're the only person that laughs, but I love you, buddy. Thank you very much, and I'll even buy your lunch today. Well, almost. Anyway, let's take a look here at Apple, folks. I'm going to give you a little bit of free advice here, and believe me, folks, this is a really important segment, so pay attention to this. Now I'm really serious. We'll get this up here. This is a chart of Apple going back to January. What I want you to see now, I've got this on a bar chart. It's not candles. But you look at the left hash mark. That is the opening price. The right hash mark is the closing price. This is how we used to get it. But you can still get it this way. In fact, I bring this up all the time because this is what I really like to use. And basically, it shows the opening price. Now, let me give you a little history about the opening price. The opening price principle was originally brought out by Jim Sibbert and Earl Hannity of the Sibbert-Hannity organization in Pasadena, California. The office was right across the street, right across the office floor from Market Research, which was Dave Nelson and Soybeans and Oscar McClure. Both of those were my mentors, and so I knew Earl and Jim, and they talked about this opening price. They wrote a little pamphlet of about 12 or 15 pages, and nothing happened to that until 1980 when I started going back to see John Hill back in the mid-'70s. From the time I was at Drexel, I'd go back there for 3 or 4 days and trade with him. And on one of those occasions in 1980, after gold had topped, because I had spent more time with him then, sometimes in February or March, we were there in Hendersonville, North Carolina, John had the idea of programming this. Now, his son, John Jr., was a senior, I believe, at Duke University, and they had computer stuff to do that. We had the data from the Chicago Mercantile Exchange, and we started to run to see how the opening price would work. And we found that the opening price was very, very good indicator. Now, you're going to have to do the work yourself here, because if you will just practice this a little bit, it's really, really helpful. And I'll tell you why it's the most helpful. The opening price will be near the high or low of the day. Now I'm talking in the top 20%. About 70% of the time. Now, that's a very, very important figure for two reasons. One, it gives you an edge, because if you're above the opening price and you're long, your odds of winning are better than 7 out of 10. If you're below the opening price and you're long, the odds of you winning are less than 30%. So that's why it's so important. A perfect example of that was crude oil today. Now, we had a really nice short signal yesterday in crude oil that worked for about 70 pips, and in a matter of about 4 hours, it reversed and just exploded to the upside. I highlighted that in the video because I said, it started out, I said it's got to stop right here. And so it was within about $270 of where the high was. So it would have been a very, very, small loss. On the other side of the token, yesterday when we shorted the Dow Jones right at the high in direction of the opening price, that one worked relatively well. So it does two things. Here's what you can do if you practice this yourself and learn how to do it. First of all, prove to yourself how often the opening price is the high or low of the day. It's going to be about 7 out of 10 times. Okay, but here's the question. Now you're trading and you're in a position and you don't know whether you should be getting in or out. Just go and look at the opening price. If you're above the opening price and you're long, you're probably okay. If you're below the opening price and you're long, you're probably not okay. It's that simple. And folks, it's a really, really strong statistics, and it really, really works. You've got to prove it to yourself. I'll tell you how well it works. John Jr. met a young man named Toby Crable. I don't know if they went to school together or what, but they were friends when I was back there with John in 1980. Toby Crable wrote a book called The Opening Price Principle or something like that. I think it sells for about $1,200 to $1,500 on eBay or something. And there's hardly any copies of it. And there's the whole book right there on that chart I just posted. That's pretty much it. And I think Toby Crable still does his stuff with stocks, but that I don't know. John Jr. does his own system now, but that, which includes the opening price. But that opening price is a very, very important principle, especially if you're in a position that you don't know whether you should be or not. Just ask yourself, am I above the opening price or am I below the opening price? And that's it. It's that simple for money management. It really is. I probably should stress it more often, but I bring this to your attention because I wanted you to see how to do this. Now, it doesn't mean anything unless you print out a chart like this and prove it to yourself how often the open is right near the higher low of the day. You'll be flabbergasted. And I used Apple because it's the most active stock it is the most heavily held stock, and the earnings are out today. So that's why I'm paying attention to this. If you just do that little exercise today, it'll pay big dividends for yourself. It's really that good, folks. I have a book called The Opening Price Principle that I wrote with John and Peggy, and it basically does the same thing looking at futures. Now, before we did this, we didn't have overnight markets. Now, with overnight markets, what you have to do is you have to use the first trade that you see when this thing pops up. And that's the main thing to look at. So when the markets open at 9:30, New York Stock Exchange, that's the open for Apple at that time. We're going to take a little break. Stan Harley's our guest at the break, 877-927-6640.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we have Timothy from Minnesota on the line. Timothy, are you there?
I'm here, Larry. Thank you.
What can I do for you?
Question on the opening price. With so many hours of trade in all the markets today, opening price is what gets recorded on the price quote system. So it would be evening start of the evening trade on grains.
Yes.
Or 8:30 in the morning.
Timothy, this is a great question, and it's one of the reasons why the book was very popular up until the time when the electronic stuff started working about 97, I believe, or 98. Now, the book is still good. The problem is because of overnight trading, especially in foreign exchange and especially in the futures markets, you have to decide what that open is be. Now, what I do in the grain markets, I use the open for what it is at 9:30 New York time when the grains open. That's what I use for the grains. And the crude oil, it's the same thing. I use that. Now, with the foreign exchange, I use the London Open in the morning. That's like at about 1 o'clock in the morning, New York time. That's the open that I use. And I want to watch to see how the markets operate around that. Now, if you're trading stocks, it's really simple. You use the opening quote that you see at 9:30 when your stock first posts. And you got to give it 5 minutes because, because electronic stuff, the post it could be off by 5 minutes. But usually between 5 and 10 minutes, you're going to get a rough idea of what that open is. And then when it starts to move away from there, then you know for sure that that's what the open is.
Okay. So
does that help?
Grains, just to reiterate that, you use the daytime open, not the overnight open.
Yes, I do. It's easier for stocks because they open at 9:30. I mean, a lot of like Apple's been trading since the middle of the night, but if you look at it at 9:30, and the reasoning behind this, what John Hill told me that he felt the reasoning why the opening price works so well is because people make their decisions the night before of what they want to do the next day. Now we're going back. This is back 40 years ago when we did this work, and that's pretty much what happened because we didn't have computers giving you all this stuff. We just had ticker tapes and Reuters and things like that. We didn't have all this other stuff. So he thinks that people were making their decisions on what to do the next day, and they would be influenced on the opening price. And it still works if you practice a little bit. It's got some great places for risk control. That's what it's made for. I mean, it's not good for predictive, but it's good for, risk control and also for trading, with the trend, because many times these make the lower high of the day right on the open, and boom. Look what happened to the grains today on the open. Boom, they just took off and never looked back. There was a perfect example of it.
Yep. Well, appreciate the conversation, Larry. Thank you very much.
Timothy, thanks for calling in, and I hope you enjoy both days of summer, July 5th and 6th.
We're looking forward to it.
Yeah, I know. That's a running joke with Rich Anderson and I. Okay, folks, since we're talking about that, thanks for calling in, Tim. I certainly appreciate you calling in. It's really, really good to hear from you. Okay, now since we're talking about this, let me give you a perfect example of the opening price, and also one other, which is the ABCD pattern that we like so much. You'll see here, Stan Harley will be our guest here in about 10 minutes, folks. You'll see this is July soybean oil, and we talked about that. You'll see at the very top up there at point A, where we were limit bid, for quite a bit of time. Then we came off of it. Look, we made the ABCD pattern. And then look what happened at the opening this morning, right at the opening. Look at that. It went from 59. It jumped $1,800 without hardly any. There was a little pullback there of about $170, but it went straight up. And it just hit the 78% level just a little while ago, which I believe is really close to limit up. So there's two examples of why it can help you, and that's the main thing to remember. It's not about how much money you make; it's about how much money you don't lose. I was chatting with Stan Harley this morning about when he come on the show, and he said one of the things he wanted to talk about was realizing when you're wrong. And for those of you that have been listening to Stan for quite a while, I think he made one of the most amazing turnarounds or calls, whatever you want to call it, back in October. As you remember, Stan was super bearish. I mean, he was as bearish as you could possibly get. And I think it was around that time that he just completely reversed, and he said, this market is not going down. It's going to go a lot higher, and higher it did. And we've talked about it on the show a few times, but that's what you have to do. Lose your opinion instead of your money, as Paul Tudor Jones says. So those are just a few of the things that you want to keep an eye on. Now, here's another example of something that I wanted to mention. We talked about Dr. Copper yesterday, and we'll get this up here and take a look at it here. Here's Dr. Copper. As you can see here, this is that top we had up there. That was the big 1.27 at 452. We then dropped 10 handles all the way down to 442, ABCD pattern to the downside, stopped at the 61% retracement of the low of April the 26th. And look at that little 3 drive to a bottom pattern on a 15-minute chart over a period of about 3.5 hours. Isn't that nice? And what does it do? It rallies all the way up to the 61% retracement, and I think that's pretty much where it stopped today. Then it backed off again. So that's what you're doing, is when you're looking at these, you're trying to find something that gives you a really simple explanation of what you think is going to happen, and then looking at it. Tucker, you're right. There's prejudice in the market, and that, to me, raise your hand. I mean, I'm guilty of that as much as anyone. So just remember that it can happen to anybody, and you have to be extremely safe. Right? Those of you that belong to 24/7, we sold the Dow Jones yesterday right after the opening when it was making a new high. That's got a very large profit in it now. We don't know where it's going to go from here, but we're going to keep our stop at break even on that and see what's happening. Also, the Euro trade, we're going to get out of that. It had about a 50 pip profit in it at one time in the Euro, but with the Fed out there today, I think it's either best to keep your stop at break even or to get out. I prefer to be flat while the Fed is talking, so we'll just book a very, very small profit in that if you're still in it, and not worry about it, because it's just not worth it with the Fed out there, because they can say anything and they do anything, and they usually do. So don't work about it. So that's the main thing of what you're paying attention to as you're listening to some of these things, that we're talking about here today. A quick update here. On the Bitcoin, I want to get this up here. and show you that we got all the way up to the 55,000 change, folks. We're back down just a little bit. So it's going to be interesting here. That was a very important bottom we made down there at that 78% level, and it was with big volume too. So we're going to be watching Bitcoin, not because we're trading it, it's because we want to see the technical pattern unfolds as we look at this. So we're going to be taking a break here in just a few moments, and we'll have our good friend Stan Harley on the line, and he'll give us some information of what he's looking at. So if you have any questions, it's 877-927-6648, and this happens to be a day that you'll be able to get through, and that is what's really amazing. Can you believe it? This is the first time in my 14 years that the board has got an open line. Holy moly, guacamole, what will happen next? See you in a few minutes, folks.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, Stan is slightly busy right now. He's going to get in just as soon as he possibly can. But before he gets here, I wanted to cover the FTSE. We missed this early in the morning. We've got a possibility here of the FTSE of making a really nice three-drive pattern here today or tomorrow. Now, this is an hourly chart, so it could easily be today. We're very near the 78% level, and so far that has held it, but you don't know. And in fact, you never know. All this is all about is risk control, folks. Has nothing to do with anything other than risk control. If you remember that, you'll be far, far better off. Now, if we take a look at the DAX, the German DAX, which is a lot bigger, I'll get this up here and you'll be able to see it. This is much, much more heavily traded. It hit the exact 61% retracement yesterday at that 15,370. It's now traded down 60 points from there, which is quite a bit in the German DAX. As those of you that trade it, it's about 7 times the value of the S&P. So it's a big contract, and you have to be very, very careful not to make any mistakes. Now, folks, there is the Federal Reserve is working today to get their speech ready of what they're going to do. Now, I wanted to share with you something that I think is relatively important. Let's get this up here. This was the chart from last week when we were watching the euro. The euro had a beautiful 135 pattern, okay? It hit our number. It backed off about 50 pips. It's trading just about exactly where it is right now. The problem is you've got the Fed speaking today, and you don't want to be in that trade while the Fed is speaking. Okay, I know there's things on the internet that are saying that Putin has decided to not take the U.S. dollar for trade. That doesn't mean a whole lot because, you know, Russia, we don't do a lot of trade with Russia. We do with few things, but not big like we have with Canada and Australia and other places like that. But, China. So don't listen to what Putin's saying. You know, he might have, because he was an ex-KGB, he might not be telling you the truth. Could you believe that someone would not actually tell you the truth in these markets? Shut the front door and raise the rent. We've got Stan Harley in the house.
Mr. Pesavento.
Living the dream, sir. Baby. Living the dream. How are you?
I'm just doing awesome. Thank you.
That's good. Stan, I was telling the folks that we were chatting before the show about, the fact that you have to admit when you're wrong. And I said to the folks today, and several people remembered this, is that when you were on, I believe it was way back in sometime, it was right after March, I think it was April or May, that you became super bullish. Wasn't that about right? Wasn't that the time frame where you changed from being very bearish to very bullish?
That's probably correct, Larry.
Yeah, because and you still are, as they say.
I am indeed. Yes, I am indeed. We've got a couple of charts to look at today, Larry. So why don't we just zip right through them here?
We got the SPX ready for you right now.
Yeah, there we go. The S&P 500, as you and I have talked about in the past, there's a couple of cyclical patterns here that our viewers need to be mindful of. The first one is what I call the primary cycle, primary weekly cycle. That's the dominant cycle, less than 1 year. I actually borrowed that term from my good friend, the late Walter Brezert. I just differ with him in the timing of it. I find that it spans from trough to trough, nominally 34 weeks. That's about 8 months, sometimes more, sometimes less. But I've traced this thing back many, many years. And whether I compute the average or the mode or the regression constant, it falls right at 34 weeks, 8 months. That those two numbers are Fibonacci numbers is probably no coincidence. Now, within the context of that weekly cycle, I find there are typically 4 what I call trading cycles. And they tend to span on average about 40 trading days each. Although rarely do you see one that's exactly 40 trading days. It's sometimes less, sometimes more. But you can see the pattern I've put up here. And one can see from the March low of last year to the October of last year, within that time span, we had 4 very clear trading cycles, 1, 2, 3, 4. I've got them numbered. And then we have that in the current time frame as well, as measured from the October 30th bottom of last year through the present. We are, by my reckoning, we are in the 3rd trading cycle off that low, and there should be 4. And my analysis suggests the 4th, we're not there yet, but the 4th trading cycle should bottom right at the end of June.
Hey, Stan, we've got a caller from Minnesota. Timothy's on the line. Timothy, why don't you go ahead and ask Stan your question?
Jeff, near Philly, I think this is the last call.
Oh, okay. Oh, that was all right. I'm sorry. The question that is being asked in the den is how many samples do you usually like to have to make a prediction, Stan? I know 100 would be nice, but what is your minimum that you would use?
Yeah, that's a good question. And in order to be statistically significant, one needs a fairly large sample size. I go back more than 10 years as a minimum in my analysis, and frequently a lot more than that. When I'm looking at trading cycles and weekly cycles, when I'm looking at weekly cycles, I go back decades with an S on the end. And when I look at monthly cycles, I'm going back years and years and years. But yes, one needs a sufficiently large enough sample size.
Do you have a way of calculating like how many events you're trying to get?
Do I have a way of counting the events? I'm not sure I understood you.
Yeah, no, not counting, but like calculating the number you need. So in other words, is there a way to calculate, I need 120 samples or I need 500 samples to be statistically significant?
Yeah. Yes. Most pure statisticians would argue you would need at least a sample size of 30 so that the population would represent a meaningful share. The reality is we don't usually get anything like that in the markets, so we have to deal with a lot less. But just one needs to recognize that you need a sufficiently large enough sample size. So if I'm looking at the trading cycle pattern, I'm going to go back at least 10 years, and I'll find a sample size of perhaps 40 or more. And then that helps me in the analysis.
Okay, great. So like over 30 or 40 would be sufficient over like 30 or 40 occurrences.
Absolutely, yes.
Oh, that's fantastic. And can I just take 15 seconds to tell Larry something? Larry, can you hear me?
Yes, sir. I'm right here.
Yeah, I'm grinning ear to ear all day. So yesterday, because of the pink supermoon, I was looking for a retrace, and I picked up 25 points on the drop. And then after that, I realized that it formed a Gartley, and I picked up 38 points on the way back up today. And I'm just so grateful for all the help that you give.
Timothy, I have 5 words for that. Consider yourself lucky. No, good job. Good job, my friend. Luck is where preparation meets opportunity. You did a good job. Thanks for the compliment. We appreciate it. And your $20 will be in the mail. Stan, please continue. And you, did you want me to move to the next chart, Stan? We got a break coming up here because you're gonna talk to us about the other one. But that sample size question is really hard to answer for sure.
Yes, and we'll deal with the second chart after the break. But just to quickly go through the first one here, one can see the 4 distinct trading cycles. I think we're right at the peak in the third trading cycle.
Okay, what we're going to do here is we're going to take a little break. We'll be right back with Stan Harley of the Harley Stock Market Cycles. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, we're back, folks. We're talking with Stan Harley, Harley Stock Market Cycles and Letter. I'm sorry. Stan, you posted a beautiful chart here with a lot of stuff. Looks like it's coming due right about now. You want to tell the folks what you're seeing here?
Absolutely. Just very quickly to Tim's question earlier about sample size, I pulled out my work during the break on my work analyzing the trading cycle pattern, and I recently submitted a research paper to the Foundation for the Study of Cycles. I looked at the trading cycles between the March 2009 bottom and the present, and I found 75 trading cycles. The average was 40.25 trading days. The mean was 37 trading days. The regression constant was right at 40.0 trading days. And that's a sample size of 75. Now, to the second chart here, I'm looking at the present time frame. You and I have talked about this over the last several weeks for a high in the market. I think we are right now, as we speak, very possibly today, making a high in the third trading cycle off the October 30th bottom. What's going on here right now that suggests that? Take a look at the numbers that I have put on the chart. These numbers are Lucas numbers. And I find, Larry, Lucas numbers are probably, when it comes to the stock market, more important than Fibonacci numbers. And I've looked at a lot of data. But if one measures from those lows that I've shown with the arrows, one will find the Lucas number, for example, 123. And then, of course, 22 is the product of 2 times 11, a Lucas number. 36 is the product of 2 times 18, a Lucas number. 58 trading days is the product of 2 times 29, a Lucas number. And at the bottom, 152 trading days is the product of 2 times Lucas 76. And they all cluster right around today. What does that mean? It means the evidence is highly suggestive, not certain, but highly suggestive. We should be making a high right in the current time frame. If we do, we will be making a high or a crest and what I'm calling the third trading cycle off the October 30th primary bottom. There should be a fourth trading cycle. So what does that mean? It suggests if we make a high right in here, we back off for a few days and maybe make a trading cycle low first week in early in May, and then we go right back up again and form the fourth trading cycle crest, and then we're down into the late June. And right now, my work suggests the peak in the fourth trading cycle should occur in the vicinity of about June 9th or so, give or take. And my thinking now, a little bit revised from our previous talk a few weeks ago, but my feeling now is we're going to peak out in the fourth trading cycle, not the third. What does that mean? We make a low here early May, then we go up and we make yet higher highs in early June, and that might do it. And that might be a significant high that could stand for several months.
Wow. That's a heck of a prediction. We'll have to have you back on again, which we certainly will. We have a question from someone in California named Michael. Are you on the line, please?
Yes, this is Michael.
Go ahead, ask Stan your question.
Hello, Michael. Yes,
I'd like if you could look at the Tesla stock. It's been a wide trading range and wild for some time. And see if you can tell me where it's headed. If stay away from it. I know Larry is not a big fan of these crazy stocks, but I would appreciate the look, please.
I'm a little reluctant to give advice on individual issues. So I'll punt to Larry for that one. But, I mean, I am looking at the pattern. Tesla, of course, topped out in late January, and it's been coming down ever since.
Yeah.
It looks to me to be in a sideways base. It's probably going to span into the end of June, where I'm expecting the next trading cycle low. So I think the upside is probably fairly limited, even as we move into the latter part of May and into early June, when I'm expecting a higher high in the popular averages. My sense is, just looking at the chart, is that Tesla will not go to a new high, that it will probably stay in the lower half of the range. The range is bounded by the high in January and the low that we saw back on March the 5th. My sense is we'll come down and probably do some work around that low, the March 5th low once again, which would also coincide with the 200-day moving average. I would probably look for support in that region. So if we were to get a low in late June, that would suggest, in that area, that would suggest a low perhaps around the 550 range. And we're at 700 right now.
I appreciate your consideration, and I'd like to say hello to Larry. It's been a while since I talked to you, and you guys have a nice day.
Thank you for calling in, Michael. We appreciate it. And Stan, I have to agree with you on Tesla. It's a weaker than market stock. It's below the 61% retracement, and I think it's going to have a really difficult time making new highs on this run. We'll have to have a more of a correction before it can build some power in there. But, you know, Mr. Musk is in the news all the time, and you could hardly fault him on his success. But, you know, the stock itself does not look technically like it's ready to go. Now, if it breaks out above 820, then I would say, yep, I'm wrong on this one. But right now, it certainly looks like it's headed down. In fact, it had some relatively good news and didn't react well. So that's another reason to be afraid of it.
A lot of folks will look at individual issues and not take into account what the broad market is doing, and I think that's a huge mistake. I think to be successful in this biz, one has to have a top-down approach. Top-down meaning start with the Dow, the S&P, the NASDAQ, the New York Composite, the benchmark averages. Let's look at how they're doing. And then look at your stock relative to how those averages are doing. If they are underperforming, be careful.
Yeah, that's a big sign. Well, since you've been so kind to us to give us this information, we would like to have you back on the 12th of May. Would you be able to do that for us, my friend?
It would be my pleasure.
We are going to have Stan, folks, back on the 12th of May, and we will be able to throw him beautiful flowers and fresh vegetables if all of his predictions come true. Stan, you've been so darn right, but for you to stick your neck out and make a prediction like this is great. And, of course, you know, sometimes you're wrong, but by golly, the numbers are there, so we'll see what happens. Anyway, I want to thank you for being our guest today, and we will have you on the 12th of May. That will be 7 days after Cinco de Mayo.
Thank you, sir. I look forward to it.
You bet. Stan Harley, folks, the Harley Stock Market Letter. Okay, we've got the S&P trading up on, well, it's basically unchanged, up a little bit, 4182. The Dow's down a little bit, NASDAQ's down a little bit, Russell's down a little bit. As Basil Chapman says, it's bifurcating once again. So we'll keep a close eye on that. We are going to bring up the chart here of Tesla because Michael was nice enough to come in, and I'll just give me 1 second to pop it up here. I've got it in a file called FANG, and we will get it right here. And here it is, right on the money. You'll be able to see it because we focused on this a few weeks ago when it was making that three head and shoulders pattern. And we were talking about that the left shoulder had to be higher than the right shoulder, which it was. And the number of days between the shoulders and heads were correct. And now we will take a break to pay a few bills. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, folks, we're back. I posted a chart of the crude oil for Ruby. She was fortunate enough to get the short off and started to work in her favor. But, folks, there's only one chart that makes any sense to me. Well, a lot of them make sense to me. But for today, this is one we've been looking for a long time. This is the weekly, and we hit that number up there, folks, yesterday, 1618, right at the exact high. I didn't even update it yet, but it hit it right on the money. And so you have to respect that. That's the largest and broadest thing that you can see in the market. And when you get somebody of Stan Harley's stature coming on here, and he doesn't do this very often, as most of you know, and he's not saying this is the top, he's saying it's a top, and maybe he's wrong, maybe he's not, I don't know. All we know is that we've got a lot of things. They got this super full moon up here, and then we also have the other larger planets that are out there swirling around with Pluto going retrograde motion. So maybe that works, maybe it doesn't. like Dudette is saying, Blue Horseshoe does not like the New York Stock Exchange Index. Very good, Maria. All right, let's talk about bonds for a second, folks. We're down now 3.5 handles from the high. We have the Fed in there today. If you see a spike bottom around 156 and change, that's probably going to be the retracement level after the high of 160. They have a lot of interest in keeping that bond market from falling apart. And, whether they do or not, I don't know. But, we've been in a bear market for a long time. We're now in a 6-week rally. So we're due for this correction, and it could go a lot lower. But the Fed's out there today. I don't like to be in there when the Fed's talking, so I just move on, to something else and let the boys play the game. But there's strong support at 156 in the bonds. But we'll pay attention to that later on. Remember, folks, that 1.618 in the NYSE does mean a lot, especially when you're looking at that 3 drive to a top pattern. This is a weekly chart, folks. This isn't a 5-minute chart, so this is big time. And that big time expansion off those numbers. You have to ask yourself the question, if it can make the 1618 on the downside, why can't it make the 1618 on the upside? Live every day in an attitude of gratitude, and may God bless.